agreement, right? We need to remember here, when suppose you want to have partnership with someone, then either that person will come to you or you will go to him. There are two possibilities. You both will talk to each other. Okay, you will keep proposal or he will offer you something. Okay, so one will keep proposal, another will accept it. Fine. So in that case, there has to be a kind of agreement. This is the example between two persons, and the same can happen between 3 persons, 4 persons, 10 persons, or up to 50. Alright, all have to give their consent on certain terms and conditions which are necessary to run a business in which they all are joining. Alright, so these terms and conditions combinedly are known as what? Agreement. Okay, so agreement is the very basis, is the only basis on which the partnership exists. Partnership comes into existence only on the basis of agreement. Alright, and this agreement can be of two types, oral as well as written. Okay, if you want to see the partnership of old time, okay, in present scenario also there are there are a lot of people who have oral agreement. They just decide orally that we invest this amount of money, we'll do this, okay, we'll divide this much money, and we are running the business. There is no problem at all, and they run the business successfully for many years. All right, but it's better to have written agreement. Okay, why? Because if the things are written, then in case of any dispute, and you know very well it's human tendency to forget, and this is another human tendency to become greedy after a certain point of time, then what happens in that case? If you really want to avoid any kind of dispute, if you do not want any kind of problem to happen, then it's better to write down all the terms and condition. So whether the terms and condition are accepted orally or these are written. Okay, when these are written, these have to be signed as well. All right, so this is known as, these terms and conditions are known as agreement. All right, okay, so one more thing I would like to tell you here, that in, say for example, written agreement is there. If any kind of dispute arises, the solution will come from here. All right, but if there is no written agreement, oral agreement is there, they both are claiming that you said this, I agreed this, then in that case some kind of provisions are given in Indian Partnership Act 1932. Those will be applicable and they all have to accept those. All right, now let's move on to another feature. Another feature is lawful business. Okay, if you are going to establish any business in India, then the business has to be legal. Okay, and in business you can do trading, you can run any profession, you can run any vocational training, etc. Okay, the business has to be legal. If the business is illegal on the terms of government, then that however you have agreed to run a business and there are members in the business, but that business will not be known as partnership firm in the eyes of the law. Why? Because that is unlawful. So the business has to be legal, one point. And another point, that the business should be having the motive of profit earning. If you're running any kind of charitable institute or clinic or any charitable activity you are doing, so that is not business over here. Business means profit earning objective has to be fulfilled. So remember this point about this. Now let's move on to another feature. See, we are discussing the features of partnership. All right, so partnership, obviously partnership, all the partners will demand profits. Okay, so profit sharing has to be there. All right, so partners agree upon that how much portion will be given to whom out of profit. Say for example, there are two partners and they agree that 50-50 partnership they have. Okay, no problem. If there are 3 partners, then they agree equally, means 1/3. Okay, but it is also possible that they do not divide equally. Okay, say for example, there are 2 partners, partner A and partner B. Partner A invest more capital, partner B invests less capital, so partner A demands more share of profit. 60% and he is getting and he's agreeing that okay, I'll take 40%. So profit sharing ratio has to be decided, okay, and they need to share the profit. And when we say profit, they have to share the losses as well in the same ratio. All right, and one more thing I would like to add here, this is also not necessary that if partner A is investing more, then he should be getting more. It depends on partner B if he is agreeing. All right, maybe possible that partner A is investing more but partner B is more knowledgeable, he is having more skills, okay, to run the business. So maybe possible that he is getting 60% in spite of investing lesser amount than the A, and A is getting 40%. But this has to be agreed between the two. Okay, so there has to be agreement over what? Profit sharing ratio, and in the same ratio the loss will also be shared. So remember this. Okay. Now let's move on to another feature. So the last feature of partnership business is business can be carried by all or any of them acting for all. I have already explained you. One more time I would like to repeat that. Okay, because when if there are less number of partners, then maybe possible that they all are running the business. Two partners, three partners, the three are dealing. Okay, and if there are more number of partners, then what happens that a few are selected that you will be carrying the business and we will be following you. All right, okay, so that feature is also there and that has come from the definition. Like I told you that all the features belonging to definition. Okay, I would like to explain here in another term as well. One in some of the books you will find this feature by the name of mutual agency. Okay, very first you need to understand the concept of agency. I'll give you an example for that. Say for example that I have shoe factory in a city that is Agra, okay, and I am running my business over here very successfully. Now I would like to extend my business to another city, say for example Kanpur. Now what I need to do, there are two options. Either I go there, establish one more factory, start doing production over there as well, okay, and another that I establish my one office over there, I do production from Agra and send the goods there, okay, and it can be sold out from there. But there is a lot difference between Agra and Kanpur, so alone I cannot move from one place to another. Right now I'm not taking the example of partnership, I'm just explaining you the concept of principal and agent. Okay, so now I'm taking the example of sole proprietorship. Fine, I am singly running business of shoe factory, okay, and the factory is there in Agra and I would like to extend my business to Kanpur. Okay, so I'm not opting the first option because it needs a lot of investment. Okay, I'm opting the second option. I want to establish one office over there so that I can send my goods there, which is being produced here in Agra, okay, and it can be sold out from there. And I do not want to go there as well. So in that case, what I do, I just hire some agent, okay, and I need to fix some terms and condition with him, a kind of agreement, okay, and what happens in that agreement must be written that this is my goods, you will be selling that goods on my behalf. Okay, so what I'll have after packing the goods, I'll send all the goods to Kanpur, and the person who's my agent, he will be selling goods on my behalf. The goods will having my name, my brand, okay, so he will be representing me, and for that he's just doing one kind of service for me, he's just selling that. All right, and after deducting his commission, he's sending the whole revenue to me. All right, so he is representing me, he is working on my behalf, so he is known as agent and I will be known as principal for him. All right, if any kind of dispute arises, for example that he sold one pair of shoes to a customer and that customer complains about the quality of that particular pair of shoe, then he will not be sorting out, he will send it back to me. Say for example if any court case happens, so that will be filed against me, not against him, because he is the agent, just representative of mine. I am the owner, I am the principal. All right, so for his act I am liable. All right, one more thing, if he commits any mistakes, if he misbehaves with the customer or charges more with the customer, then also the complaints will come to me and I'll have to handle them, either maybe possible even from my pocket. Okay, so for his good or bad acts I am liable. All right, so he is representing me and I am liable. I am principal and I am liable for my agent's action. Understood the point? Now let's come back to partnership. In partnership, what happens? The person who are carrying the business, like I told you that if there are 10 members and only 2 are carrying the business, others are doing other activities. Okay, 2 are there in front. So these 2 will work as agent. Okay, they will work agent, and these all 8 will work as principal. One point, simultaneously, okay, they are also performing the function of principal as well, because they are the owners as well. Okay, so partners are principals as well as agent. Okay, for themselves they are principal and for others they become agent. Okay, so we need to understand that. Okay, so when these 2 are carrying the business, so these become agent for these, they become principal. All right, and in that case, and they are principal for themselves as well. Understood the point? So this relationship is known as mutual agency. So one partner is principal for another, and another partner is principal for another one. Okay, and they both are agent to each other as well. There are 2 partners, both are principal and both are agent to each other. Understood the point? Okay, that is why it is known as mutual agency. Okay, now let's move on to another concept that we are going to discuss in this session. Nature of partnership, right? We need to understand it very specifically. In 11th standard, you learned one accounting principle, that was business entity concept. You remember that? According to that, what happens? Business and owner are separate. All right. So that principle is applicable in partnership as well. Okay, means from accounting point of view, okay, there is a separate entity. Okay, we can say that partnership firm is having a separate entity according to accounting point of view, and owners are treated separately. Okay, so according to accounting point of view, owners means partners and their partnership firm, they both are separate. Okay, and we do separate entries for that. If a partner gives loan to firm, then it will be treated like loans from other party, and he will be getting the interest as well. The particular partner will receive interest as well on the loan provided by him to firm. All right, so this is what the concept of business entity, and that is applicable here as well. Okay, I would like to repeat what I said, that according to accounting point of view, there is separate entity between partners and partnership firm. Partners are separate and partnership firm is separate. Now, but according to legal point of view, there is no separation. Understood the point? Okay, there is no separation according to legal point of view. What does it mean? I explain. For keeping the books of account, we'll follow the system that we were following in the sole proprietorship as well. That will be applied here as well. All right, but legal point of view, what? Say for example that partnership firm becomes insolvent. Insolvent means their liability increase than the assets. Okay, and they do not have sufficient assets to pay all the liabilities, and continuously they are occurring losses, and they are unable to recover. So at the end, what happens? Their partnership firm has become insolvent or bankrupt. All right, now in that case, who will pay money to these creditors? Outside payments who will make? From where these liabilities will be set out? From their personal property. All right, That is the concept that from legal point of view there is no separation. If the partnership firm has become insolvent, then you means all the partners are liable to meet that loss or deficit. Understood the point? But we'll keep the records according to business entity concept. So remember this. Alright, this is all for today. Another concept we'll be covering in the another session. Thank you.